Real estate investment trust Prologis, stock ticker PLD, is currently trading at $131.62 per share. We can see over the past year they're down about 15.87%, but over the past month they are up 15.54%. Now for the 52-week range, we can see there's a pretty wide gap here. It's $98.03 on the low end, $174.54 on the high end. It's important to remember this is one of the largest real estate investment trusts out there. They own over 5,495 properties and over 1.2 billion square feet, and they have a really nice mix of underlying businesses that they do lease their properties to. So in this video, we're going to be jumping into my real estate investment trust spreadsheet. We're going to be looking at different valuation models such as the AFFO multiples, historical price to FFO dividend discount model, a couple other things. So let's go ahead and jump over to our stock screener. If you'd like to be able to download the spreadsheet, then you can head over to my Patreon page at the link in the description. But let's go ahead and come up here and plug in PLD and hit enter, and you can see all of this data is going to automatically load in. Now I currently have a 500-day change chart plugged in. Let's go ahead and change it to 365. So even though they've had a run up fairly recently, they're still pretty far off from that 365-day high. If we come over here and look at the dividend data, we can see they're currently paying out $3.16 per share, which gives them a dividend yield of about 2.4%. Now that is a little bit lower than I typically like to see for the real estate trust that I invest in. But if we jump over here to Seeking Alpha and look at some of the dividend history, we'll come down here. We can say they have been increasing the amount they pay in dividends for over 9 consecutive years, and they have been paying out consistent dividends for 12 years. So let's go ahead and scroll down. We'll look at a 10-year chart. We can see 10 years ago, they were paying out about 28 cents per share quarterly. Jump forward to now, that is now about 79 cents per share. So that's really solid dividend growth, especially for a real estate trust. So I don't think that's necessarily a bad thing to have a low starting dividend yield if you're someone who is looking for dividend growth. Now the 20-day moving average is up about 6.4%, 50-day up, and the 200-day moving average up as well, about 8%. If we come down here and look at analyst target price, we can see it's around $140 a share, institutional ownership around 79.6, and the beta at 0.97. So the volatility should be that pretty close to the market. But let's go ahead and jump over and look at our AFFO multiples. And essentially what we're doing is we're looking how the market is valuing companies that are similar in structure and looking at what their price to AFFO multiple is. So you can see the comparable companies we're using right here. They have an average price to AFFO of about 33.85. Now, for PLD, we can see their price to AFFO is about 29.15. So that's a little bit of an indicator that they may be undervalued compared to their peers. So when we plug that into our formula, you can see we come to an intrinsic value of $152.86. That is a little bit higher than that current trading price of $131.62. Now, the next valuation I typically like to look at when I value a real estate investment trust is going to be our historical price to FFO model. But you can see I did a lot of digging and looking at some data, and I just didn't see reliable data. I saw a lot of missing data. So this really is an evaluation model that I can use in this scenario. So let's go ahead and jump forward and look at our dividend discount model. And the idea behind our dividend discount model is we should be able to value a company based on how much they pay out in dividends and how much that dividend is increasing over time. So I plugged in the quarterly dividend payouts right here. We can see that gives us the yearly dividend payout, so we can see our year-over-year dividend growth, which has been extremely good for the company, like I mentioned earlier. A year of over 10% dividend growth, 9.43, 8.62, and the most recent dividend increase, 25.4%. That's absolutely phenomenal dividend growth, especially for a real estate investment trust. That's an average growth rate over that time period of about 13.47. So moving forward, I'm projecting a growth rate of 4%, which is quite a bit lower than that average growth rate. I think that will start to come down in the coming years. The discount rate will be around 8.5%. And when we plug all of that in, we come to a dividend discount model price per share of $219.09 per share. So that's a really good valuation for our dividend discount model. Now, net asset value is also a pretty popular way to value real estate investment trusts, but honestly, I think there's so many variables with this kind of valuation that it's honestly really easy to get a poor valuation for this company. So I'm actually not going to be using this, but if you download the spreadsheet and want to test it out yourself, using this sensitivity analysis is a really good way to see that depending on the cap rate you apply and next year's not operating income, what a fair valuation is. But when we jump over to our output tab, we can see the two valuations that we did use, the AFFO multiples at 152 and dividend discount model at $219 per share. That gives them an intrinsic value of around $185.98. Their current trading price is around $131.62. So let's say we apply a 20% margin of safety. Based upon that, the acceptable buy price for this company is around $148.78, meaning now is a good time to consider buying this company. Let's go ahead and apply a different margin of safety. Let's say we go 30%. Based upon that, it's not quite in that buy range as you can see right there, but it is getting very, very close. But if we jump back over to Seeking Alpha and look at their price action over the past year, there's definitely been opportunities. So as far as an entry point for me, I think it's going to depend on what my economic outlook is. I think there's a lot of upside for this company with its size. It has a whole lot of competitive advantages. So it's definitely going to be a company that is on my watch list. But go ahead and let me know what you think of this company in the comments down below if you plan on buying or selling. If you'd like to be able to download the spreadsheet, then you can head over to my Patreon page at the link in the description. So that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.